Good morning, everybody. It's Friday, November 20th. This is the live market open. I'm Yohay, Forex Crunch and Market Movers, doing the show for FX Read. And as we speak, we already have action in markets, and we have Mario Draghi speaking soon. As usual, we'll cover the recent developments, charts and levels, the next 24 hours, and also of course, your questions. So. If you can't see the chat box under the video, please go to tlk.io/fxrate-forex-live-video. So let's see if we have anything from Draghi speaking today in Frankfurt. Just now he begins his speech. I'll be on the watch for headlines, but we already have seen the euro sliding. So let's first of all look at the chart. 106.88 is the current level. It's down from highs seen yesterday, 107.60, and basically grinding down. But where did this all begin? All the rise of the euro. Now we're back to the levels we've seen yesterday morning at the same time in the show, but we had this kind of round trip to the upside. So he uses a lot of oxygen. Anyway, let's take a look at what we had yesterday and then cover Draghi. Let's see why we had this rise. So first of all, in the UK, we had retail sales coming slightly below expectations. This hurt the pound only a bit. ECB, we had meeting minutes. I said that it's not important, and it really didn't move markets yesterday, but they did add hints of moves in December. Okay, they said basically the gist of things were, we're ready to act. We need to be convinced not to act. Okay, it's similar to the Fed that has a tendency, and if they have news going to the other direction, maybe they'll change their mind, but basically they want to act. Okay, so that's just not news, but it adds to the pressure. Jobless claims in the United States came out as expected. The Philly Fed manufacturing index came a bit above expectations, and we had a few speakers from the Fed. Fisher said rates will probably rise, but nothing has been fully decided. All the figures from the United States, and Fisher was what he said later, and was always supposed to support the US dollar, right? But what we've seen is an extension of the moves of a weaker US dollar. Okay, so we've seen euro dollar rising all the way here, what we talked about, when above 107.60. Pound dollar, pound is always stronger, and it rose above 153 very temporarily. We can see this as a false break, because then we're back to the previous range, 152.50 to 153. Dollar yen slipped under 123 and still hasn't recaptured that level. Okay, so why did we have the US dollar falling? Okay, so my explanation for that is that we had the Fed meeting minutes on Wednesday evening, and this didn't give us further hawkish signs. Okay, the market was positioned for perhaps they wanted a clear-cut hint. Okay, we didn't get that. We got what we thought we would get. That in October, the meeting in October, they wanted to hint about a rate hike in December, and we got the full explanation now. And of course, we have different opinions within the Fed. Now, that triggered this no news this time, triggered some kind of sell-off in the US dollar, and this accelerated yesterday. So there was a first reaction of a weaker dollar and then a second reaction. That's one explanation to the US dollar weakness. Another explanation is that markets are already looking at this December rate hike, pricing it in, and already thinking beyond. Finally, someone is listening to Janet Yellen and her colleagues that are saying that don't worry about what's not important is the timing of the first rate hike. Please focus on the pace, on the fact that the rate hikes are going to be gradual, on what's going on later on in the rates. Okay, so that's another explanation. Anyway, I tend to see it more as a positioning. Okay, we had a stronger US dollar, and now this kind of correction. Okay, so that explains what we had so far in markets. More currency pairs we have. Well, now we're seeing the US dollar strengthening once again, but if we look at dollar CAD, we had it fall just above support at 132.40 and now rising back above 132.80. resistance at 133.70 and then 134.60, the 11-year high. Aussie dollar currently around 72. 72 level is not a round number, but not so strong anymore. 72.20 is where I see support resistance at the moment. 70, maybe this line could be more accurate right here. 71.50, but then 70.65 is strong support. Aussie dollar, we received a comment from, yeah, Draghi should be now. I am following on. I have here lots of screens, and I'm following the headlines to see if we get anything. So Aussie dollar. In the meantime, talk about other currencies. Got this comment from Heath, member of the RBA, the Reserve Bank of Australia, and he basically said that sort of they're happy with the fall of the Australian dollar. It helps competition and things like that. So he wasn't sort of asking for more falls. Sort of relatively pleased at the moment. Okay, Kiwi dollar 65.70. Also yesterday we've seen it get close to 66.15, previous support line and also resistance, and currently in sort of the high range. 65.70 is support, followed by 65 and 64.50. Okay, yeah, no signs of Draghi yet. I'm really looking forward to have a few screens open here. This should be the big event of the day, because talked about currencies, we talked about developments. Euro dollar, sorry, it's right here. Euro dollar is already sliding. One of the reasons it's sliding early in the morning is that we had German PPI, producer price index, come out below expectations. So this is the FX rate calendar on Forex Crunch. We had it fall 0.4% month over month and 2.3 year over year. Now it's not an important figure; it's a second-tier figure, but I think the euro was already weakening, and it sort of these losses accelerated with the release. It was sort of some kind of trigger. Okay, so perhaps not the actual number, but the actual release. Let's see what else we have today on the agenda apart from a speech from Mario Draghi, a keynote speech. So today we have at 9:30 GMT in the UK, the public sector net borrowing, how much money the government takes from markets in order to spend. In theory, this is a conservative government going for austerity. In practice, not exactly that kind of thing. But anyway, this is not a big market mover for the UK. Later in the US session, we have Canadian inflation and retail sales. Okay, so for those of you trading the Canadian dollar, this is a big bulk of information. It's the consumer price index year over year. Headline figure is at 1%, expected to remain the same. Core CPI in Canada is expected to slide from 2.1 to 2. All in all, inflation is quite okay in Canada, and retail sales month over month expected to rise 0.2 after 0.5, and core sales to drop. Let's see if, as always with these kind of bulk releases, what's important to see is if all figures go in the same direction or not. Okay, so if we have strong inflation and weak retail sales, we'll have a mixed Canadian dollar. If we have the other way around, the same. But if both are positive or both are negative, then we could have a more meaningful move. For Canada today, we also have oil. In the context of Canada, we also need to look at oil prices. So they've gone up, 41.80, bouncing again from 40. Not only a round number, but also clear support. If you can see here in recent days, we had it dip under these waters 3 times so far. It's been a bounce. 42.50 remains resistance on WTI crude oil. For change, inventories didn't rise too much, but doesn't mean there's not. We're going to see a change, a bounce in oil prices. I mean, a big bounce because there's still too much oil floating around international markets. So this is something to look. If we have the price of oil sliding once again, we might see Canadian dollar weaken. But for today, it's more about domestic figures. Currently, yeah, 133 and 132.80 is first support. More important support 132.40, resistance 133.70 and 134.60. Okay, thank you, Jay. Should be in a few minutes. You have a link here to Bloomberg. Let's click on this. Yeah, that's still Bloomberg TV. So yeah, they usually broadcast these events live. Let's open. I'll open this as well. Keep it muted just to have lots of commercials. They didn't used to have that amount of commercials on Bloomberg TV. Anyway, that's what's going on. I'll have also this screen open, waiting Draghi speech. What else do we have today apart from Draghi and Canadian figures? We have another speech from Bill Dudley. He's the number 3 at the Fed. He already spoke this week. He didn't really say anything new, but perhaps his words just before we enter the weekend could be a bit more meaningful. Okay, so he'll be speaking at 4:15 GMT, and yeah, and let's see if I'm not sure he'll say something more meaningful, but because he speaks at this time, just as London closes, it could have a bigger impact on markets. So just watch this timing. Question from Jim: where can we catch Draghi's speech link? Well, you see, Jay put up this link to Bloomberg TV, and yeah, and I have the screen in the background, and they see they have this screen, this sort of, it's a broadcast from some kind of conference room. I guess Draghi will enter the room soon. It's full of reporters, and they're interviewing some guy at the moment. Anyway, so 106.92. What else do we have today? Anyway, I'll try to bring you the headlines. Bloomberg TV brings you the speech live, the raw data. I'll try to summarize the headlines and analyze what's going on in euro-dollar. Let's talk about euro-dollar, about the levels. So 106.60 used to be an important line because of its role in the past. Now it's 106.70. We see it supporting euro-dollar back on November 10th, last week, and also now, also yesterday, it provided some kind of support. So that's the first line to watch if Draghi goes dovish. Okay, if on the way up we have perhaps yesterday's top here at 107.60 is more important resistance, still minor. Really strong resistance, if Draghi is more bullish, is 108.30. Okay, on the downside we have 106.30. Despite this drop here around Wednesday, around the strengthening of the US dollar, I believe that this line is still of importance. Under this line, under 106.30, we have only 105.30. Okay, because that's this is the daily chart of euro dollar. We have it. You can see 105.30 was the line back here in where was it? In April. Okay, and before it, we had a low in March of 104.60. That's critical support. Yeah, I don't see him either. I see just someone talking on the left-hand side and people waiting on the right-hand side of the screen. Anyway, I have lots of screens open, Twitter, Bloomberg TV, anything, Forex Live, FX Street, lots of websites to try to catch the headlines. In many cases, we have the headlines released, not the headlines, sorry, we have the content of the speech, the full content of the speech released on the ECB website, for instance, and then he begins talking and basically reads out the speech that we already have. In this case, because I don't see headlines, I believe that either the ECB will release the speech only once he begins talking, or that the ECB will do that only afterwards, and we'll have to really listen to the speech to get the headlines. Listen to the speech, follow headlines on Twitter, follow, of course, my commentary here. Okay, so that's what's going on. This is the main event of this morning. I believe he'll say, the preview I did on my website, I mentioned that he'll have the final word for this week, because so far this week we had, we had euro-dollar slide to new lows, but then recover because we didn't get news from the Fed. So now he'll have the last word. Speaking about the Fed, let's look at rate hike expectations for December. It's again at the top end of the range we've seen in recent days, almost 72%. Markets are beginning to understand that there's a rate hike, a bit looking towards the future, not so much. We had, I think I mentioned this yesterday, reports from Goldman Sachs and JP Morgan talking about parity until the end of the year. Goldman explained it by saying that first we'll have the ECB decision in 2 weeks' time, sending the pair 200, 300 pips lower, and then the Fed decision on December 16th, another 200, 300 pips lower, and this way we'll reach parity. This might be a bit too much. My forecast is for the pair to dip below 104.60, maybe reach 103, maybe under 103, but then bounce a bit back up. But who knows? This is we'll have one thing that's certain is that December will be very, very exciting. Okay. But before December and before Draghi speaks, while we have time, let's look at the events we have later. We talked about the events for today, and let's talk about the events we have next week. So next week on Monday, we have a bit more focus on the Eurozone. We have Eurozone PMIs, contrary to GDP. These are forward-looking figures for November, preliminary, sort of looking to the future. The most important one is German manufacturing PMI. That's because Germany, well, is the biggest country in the Eurozone, and it really manufactures. It's the biggest sector. And it's also important to look at German manufacturing in the context of Volkswagen in the crisis to see if it has an impact. So far, business confidence in Germany looks a-okay, but let's see if it changes. We also have US existing home sales. On Tuesday, that's a busy day. German IFO business survey, another insight about the German industry, about the Eurozone. And then we have the second release of US GDP. Contrary to many other countries, revisions are quite big in the United States. So last time we had 1.5% annualized growth. This time it could be a bit higher, in my opinion, but not something very different. But who knows, these revisions, they go crazy sometimes. And we also have US consumer confidence, the CB. On Wednesday, we have a busy day in the United States as well. That's because Thursday is Thanksgiving. Okay, so we have a few releases crammed together. We have durable goods orders, which is important to look at because it reflects investment, and core PC, which is the inflation figure the Fed likes most, and jobless claims all at once. Okay, and then we have a very, very light Thursday. Markets are open. We'll be here, don't worry. But we don't have too many events. We have thin volume. Now, Thanksgiving last year, we had the OPEC meeting at the same time, and they decided not to cut production, and oil prices were hit hard on very thin volume on Thanksgiving. This time, the OPEC meeting is only the first week of December, and it's not as dramatic as last year. So at the moment, we're expecting a sort of quiet Thursday next week, but who knows? And and then on Friday, we have UK GDP and a few other figures and a bit more volume. Okay, so we have a very busy Monday, Tuesday, Thursday, quiet Thursday, Monday, Tuesday, Wednesday, and then a quiet Thursday, and then again, a bit more of a busy Friday next week. We'll repeat the preview for next week in the... Okay, we have some headlines from Draghi. We'll repeat the headlines in the wrap. Euro dollar is falling to 106.82. Let's see what Draghi is telling us. Draghi says they will do what they must do to raise inflation. Strong words from the president of the ECB. Euro dollar, well, he doesn't say anything very specific, but this is of course bearish because he seems determined. He shows this kind of verbal determination to act. So we're seeing 106.83 on euro dollar, and let's see what else, what other headlines we can pick up from Mario Draghi. Yeah, we have a few more about downside risks. So he said the downside risks have increased in recent months. So that's also bearish, also euro negative. That the strength of the underlying recovery is modest. Okay, that's not that huge of a headline. And another expression of determination is that the ECB cannot be relaxed about low core inflation. Okay, so this is a repeat of the same stance in different words, but of the same stance of things he said last week. Last week he also said that the strengthening in core inflation is weakening, and now he says that core inflation is still too low, even though this week we got updated figures and it actually rose to 1.1% year over year, but it's probably not enough for the ECB. And so that was another negative reaction. Anyway, he wants weaker. He wants to battle weak inflation, and that weighs a bit on euro dollar. Okay, so we have it at 106.82. Lower since the beginning of the day. We fell something like 30 pips, but most of the fall came before he began speaking. Okay, so far we're at the lows of the day, 106.80. Right, let's look at other euro pairs. Let's look at euro Swiss. Euro Swiss not moving too much. We had comments earlier from Thomas Jordan, the head of the governor of the ECB, sorry, of the SNB, the Swiss National Bank. He said that they'll basically continue intervening and that the Swiss franc is overvalued. So don't expect movements here because each time the euro weakens, the SNB intervenes. But on euro pound, it's clear to see sort of mirroring the movements in euro dollar, and we're seeing a fall again below 70. Note, 70 is a round number here, but not important. 70.20 is the clear line of resistance now. Earlier it was support. Quite nice trading right here. So far the lows are not that far away, but we mentioned this before. Support comes at 69.40. Okay, for this this cross. Okay, so let's see if we move towards that direction. Let's see how hard Draghi hits the euro. Euro yen also weakening, 131.40, already struggling to hold on to this previous support line of 131.50. Let's put another line here for the next support line at 130.62, and of course further support at 130.60. Okay, so these are the euro crosses. Does anybody have any questions? As always, you're welcome to ask questions at any time. Let's see if we have more Draghi headlines. Draghi headlines are not market moving at the moment. Let's put again euro dollar. No, it continues grinding lower. Yeah, 106.78, 9. Anyway, he said that the level of the deposit facility rate, which is the negative deposit rate of minus 0.20, can also empower the transmission of APP. Lots of acronyms. Anyway, he hints once again that they're ready to cut the negative deposit rate. In the past, they said it has reached its lower bound, but in October, they already hinted that it was under discussion. They discussed cutting the negative deposit rate to even deeper negative ground already in October, and they're probably ready to act in December about that. Later on, we learned in early November, we learned that there's probably more consensus about speech was just published. Okay, yeah. So I'll try to dig the headlines from the full speech. We're already seeing on Twitter, on other websites, some headlines from the speech. Anyway, we already learned that there's a more tendency to cut the interest rate and the deposit rate to even deeper ground, more than adding more QE. Okay, what else is Draghi saying? Now we have the headlines also on Bloomberg television. Yeah, the same headlines I read out. He referred to the December meeting, saying that they'll thoroughly assess the strength and persistence of the factors that are slowing inflation back to 2%, and what else? They'll of course take into account risks to price stability, inflation. Yeah, more of the same basically. And Eurodollar is at the current levels of 106.80, 106.75, a bit weaker. I have a question from Tillen. I believe no one asked this before. What Twitter accounts is it wise to be following? Well, there are many Twitter accounts. I actually did an article about that. Let's see if I can pull it out for you. A bit of self-promotion. But I hope it's okay. Anyway, Draghi weighs down the euro, 106.80. It's not going too far. Still remains above the support line of 106.70. Let's see if I can pull the article for you. Very long one, I must say. But anyway, lots of Twitter accounts I follow. So you have it right here. Okay. I just put it on the chat as well. Draghi saying, yeah, he hasn't actually spoken, but his speech has been released and we read out the headlines and we're seeing an impact on the euro, weakening the euro. Okay, let's talk about a few more currency pairs and I'm looking forward to your questions. Okay. Pound yen, it made a false break above 188.10 and now it fell below this level. Now 188.10, as we can see, it still serves a strong resistance. After this break to the upside, we had a fall, and now it's resistance once again. The pair is unable to break higher. If we have another attempt, 190 is weak resistance, 191 strong resistance, supported 186.30 and 184.50. Yeah, thanks, Jax, for the kind words. What other currency pairs? We had a look at gold this week, I think. It made a dip to lower ground and now sort of recovering. Well, yeah, 1070 still serves as support in gold prices. Other currency pairs you want to cover, other questions, other events? Anyway, on a weekly basis, what's going on with euro dollar? It's down. Okay, last week it sort of the last dying minutes of the week it went up just a bit, and now it's up on the week a bit, but beforehand it had huge losses. Now it's down on the week. Okay, let's see if we can challenge the support line of 106.70. And we have other events, of course, today. Another headline that's coming out is that Draghi says they're not short of instruments to meet the mandate. Another headline. It's important to know that even though we have a full speech out, okay, and everybody can read it, what sometimes makes the impact is the headlines that news wires like Bloomberg or Reuters decide to pick out, okay? That makes the immediate impact. We've seen that with the meeting minutes and we're seeing it also now, okay? So Draghi actually hasn't spoken, but news wires have picked up on headlines we read also here, and we're already seeing an impact on euro dollar, okay? More questions? More currency pairs? Anyway, it's Friday. Let's talk about what we had last time from the ECB, just to put things in context. 106.73 is the new low. In the meantime, okay, let's remember what we had before the week began. We had these terror attacks in Paris. It was around 130 people killed. Bad news on Friday. Not the only terror attack, not the only bad news in the world, but when it happens in the French capital, it's of course more meaningful. Now Draghi is actually talking, but we have his speech already out. We had an ongoing manhunt. We had France striking in Syria. We have today a conference in the Eurozone about the Shenzhen agreement, the open borders, reconsidering it. We had very temporary risk aversion. basically we didn't have real impact on markets. Of course, if we have tighter security across the continent, it could have an adverse impact. If we have, hope not, more tax, it can also have an adverse impact. On oil, it must say doesn't have impact because not much oil coming from the conflict zones. Most of the oil coming out of Iraq is coming from the south of Iraq, and from Syria, there's only little production of oil. Anyway, it still echoes in the news, but it's fading out. It's causing distraction, so it caused at least the beginning of the week, so the volumes were a bit lower. Okay. Yeah, Draghi didn't speak out yet. The question from you, Jax, but he did. But his speech, the content of his speech was released. Okay, so now he's actually speaking in the Eurofinance Week in Frankfurt, but because the content of his speech is out, that already has an impact. We could see further impact by if Draghi answers questions and uses the question and answers to say something new. Okay, so we're seeing an extension of the falls to challenging the 106.70 line, but not because Draghi began speaking, because so far he's just reading out the speech we already know of. Okay, so the speech was released earlier. Now, if you'll have questions and answers, and like in the rate decision, usually, well, it depends less on the reporters, and more on if someone asks a question. If he decides to drop another hint or something in the Q&A session. Okay, so sometimes he does that on purpose. At least in rate decision, I'm not so sure about conferences like this one, the Eurofinance Week conference. Anyway, you can listen to him, but basically the news are out on Bloomberg TV. They have him live, and the headline on Bloomberg TV that I see now is the economy needs more aid if recovery not self-sustaining. Basically more of the same, basically from the same speech. They'll have to raise inflation quickly. Okay, the low so far 106.67, still struggling with 106.70. Okay, so that's the main event of this morning. Yesterday we had a busy day that was less focused on the euro. Today it's more about the euro because Draghi is speaking and hurting the common currency. It's still down on the week. Okay. More questions? I see quite a few of you in the room. Some of the names we know you ask questions. Looking forward. Anyway, what the slide I really wanted to show is this one, just to put things in context around Draghi's speech, okay? So on October 22nd, they opened the door for extending QE beyond September 2016. Not really news, we already knew that. He opened the door to expanding QE beyond 60 billion per month. That was more significant, but since then it seems that it's the minor option. The bigger option is cutting the deposit rate, which he also opened the door to. He expressed worries about inflation like he's doing now in his speech, and also about the exchange rate, something I haven't seen now in the speech. And he used the word vigilance regarding action in December, which is the word his predecessor, Jean-Claude Trichet, used to hint about action in the next meeting. For Trichet, it was hiking the rates. For Draghi, it's cutting the rates. Okay. Basically, since then we had other comments from ECB members. Some of them repeating what Draghi said, and some of them saying they don't think there's a need to act. But Draghi, in his speech last week and also now, he's making it clear that the ECB is going to act. Okay. Another comment from Jax. They leaked his speech. Did all the reporters leave? No sense in watching the game. What do you know who wins? Yeah. I think they still like being in the spotlight, being around one of the most influential people on financial markets. Anyway, yeah, other reporters outside the room are digesting the headlines and shooting them out. But, maybe there's a Q&A session there, so that's and important. That's an opportunity to ask questions. So far, 106.70 is the level we're seeing. Let's see if we have more headlines. Yeah, I think things I've already read out. Balance of risks to stability skewed to the downside. He does pat himself on the back just a bit. Monetary policy measures have worked. The repair of the Eurozone economic situation is not complete. It's the weakest Eurozone rebound since 1998. It's going to be the weakest year of growth since 2009. Yeah, if you want to read his full speech, you can see it here on the ECB website. Okay, here you go. Anyway, I think it'll help you fall asleep. Usually it's not that interesting, but if you want it, it's quite long. Anyway, the headlines are more important, okay, than the deeper speech. Question from Malcolm: will this create more decline expected for euro now? Well, so far it doesn't say anything really new. It just shows determination to act, and sort of there were doubts cast by some of his colleagues. He did that. He removed these doubts on Thursday last week, and he's doing it once again right now. So that weighs on the euro. An accelerated decline, I'm not sure. Let's see if he says something more meaningful, like giving us a real hint about how much they intend to increase QE, or how much they want to cut the deposit rate. I'm not sure he's going to do that. I believe they'll just leak us some stuff next week and then beat their own expectations. Draghi in January did this under-promising and over-delivering. He's a master of that, and maybe he'll do that again. We're challenging the lows of the day once again. 106.67. Let's see, yeah, we're pushing lower, 106.63. And yeah, but it's a few pips grinding down. So total on the day, we're already down around 50 pips, but it's been a slow move. The slow move is maybe frustrating for some, but allows people to jump on the bandwagon. I see support at 106.30 and 105.30, resistance at 107.05, but more importantly, 107.60. Okay, more questions? Let's take another look at euro pound. Strong move also there, challenging the lows seen yesterday, right here. Okay, so it's 69.80, but stronger support for euro pound is at 69.40. Okay, euro yen, same trend exactly. Even euro Swiss is falling just a bit, but really we just heard from Thomas Jordan that they're keen to act as well. Okay. Any questions? And also, let's look at the Fed. If we already talked about the ECB, the Fed also, in the recent minutes, they basically repeated the same stance. They're less worried about the global economy, did acknowledge before the NFP that employment is slowed, but it's still growing. Since then, we had a strong employment figure. Inflation is somewhat lower, but long-term surveys expectations are good, stable. And they talked about next meeting when setting rates. That was a hint, and in the minutes they explained to us that indeed that was a hint. Okay, so the Fed is on course to raise rates. Also here we can see the chances of a rate hike are around 72%, and the ECB, as we hear now from Draghi, is keen to act to the other direction to add more stimulus. That's why we're seeing in the long run a weaker euro dollar. Look at this trend, and this is only from the recent weeks. Okay, any more questions? In the wrap up today, and we'll reach it soon, we'll also preview again next week's events. Yeah, I don't see any more questions, so let's begin with the wrap up for today. This is the wrap up of the live market open for Friday, November 20th. We had quite a lot of action in markets, the US dollar weakening and then strengthening once again. Reaction to the Fed minutes that didn't provide anything new, some profit taking, and perhaps the markets are looking beyond a rate hike in December 2015 and thinking about only weak rate hikes, gradual rate hikes in 2016. That means they're beginning to listen to the Fed, but it more seems like profit taking to me. In addition, we had retail sales from the UK coming out below expectations, hurting the pound just a bit. The ECB added hints about action in December also now. Jobless claims came out as expected. Philly Fed was okay. And Fisher didn't say anything new. Basically, rates will rise. And in Australia, the RBA seems okay with a weaker Australian dollar. This morning, we have Mario Draghi speaking. He is repeating the same stance that we had in recent speeches in the ECB decision, basically ready to act, must fight low inflation, worried about core inflation, worried about global growth. The economy needs more aid if it's not self-sustaining. Not saying anything really, really new, but lots of determination to act in December, including cutting the negative deposit rates to lower ground, hurting the euro. The euro did a round trip. Now it's already down on the week once again. Levels to watch on euro dollar. On the downside, 106.30, which saw only a false break, and then 105.30. On the top side, 107.10 and 107.60, and then 108.30. Okay, pound dollar is back to the previous range. Still a relatively high range, 152.50 to 153. Next resistance, 153.70. Next support, 152 and 151.60. Dollar yen, this weakening of the US dollar, weakened dollar yen below 123. Support at 122.70. Resistance, strong resistance at 123.60. Canadian dollar today is expecting big events, retail sales and CPI at the same time. Currently 133.30, top side 133.70 and 134.60, and the downside 132.80 and stronger support at 132.40. Aussie dollar just around 72, resistance at 72.20, support 71.50 and 70.65, high resistance at 72.80. Kiwi dollar 65.63 at the moment, struggling with the 65.70 line, resistance 66.15, support 65 and 64.50. Okay, what else do we have today? We mentioned the Canadian figures. UK has the public sector net borrowing, not a big event. Eurozone consumer confidence at 3, and the last word from central banks comes from Bill Dudley, number 3 at the Fed at 4:15 GMT. And the big influencer is, of course, Mario Draghi, which is talking now about downside risks that they have increased, basically repeating the same stuff. Basically, what we know from the ECB is that they're about to act. We need some material improvement, some miracle for them not to act. Regarding the Eurozone, we'll hear more data next week. So here, this is the preview for next week, the week beginning on November 23rd. So on Monday, we have Eurozone PMIs. The big focus there is German manufacturing, the only country that really manufactures a lot and the continent's largest economy. Important, especially in the context of the VW crisis. Existing home sales, also of importance for the United States. On Tuesday, we have busier day. German IFO survey, more important than ZOO, sort of completes the picture for November regarding German's business sentiment, and US GDP. In the second release, there are always significant revisions. So this is important to watch, and also consumer confidence. Wednesday, we have, because of the Thanksgiving vacation in the United States on Thursday, we have lots of figures crammed on Wednesday. Durable goods orders important for investment for the long term for the Fed. Another Fed figure is the core PCE price index, 1.3 year over year. And let's see if it ticks down or up or stays the same. I don't know where it'll go, but this is the key inflation figure for the Fed. Employment, the first mandate is good, but the second one, inflation, not so. And we also have jobless claims, so we have both mandates of the Fed at the same time. Thursday is quite light in events. Markets are open. Low liquidity means long hours of boredom, but then the markets can move quickly because of some small order. On Friday, we have a bit more liquidity. Officially, it's not a vacation in the United States. Many traders are still on vacation. And then we have UK GDP to close the week, among other events. Of course, these are the top events next week. We also have others. We will cover them every day. We'll be here next week, every day as usual. So that's the preview for next week after the wrap for this, for today. And before we head off, we have another question here. As I understand, EFZFX asks, not enough bonds for ECB to buy, and many bondholders not selling to ECB must surely announce that they will also buy corporate bonds. What are your thoughts? Euro had a positive correlation with Europe's stocks, but now it's changed inverse. That's due to carry trade in euro. That's changed. Also, Norway Health Fund has been offloading huge European stocks. Well, lots of questions here. Let me try to answer that. Yeah, so first of all, the ECB wants to buy mostly ABS, okay, asset-backed securities, more than it wants to buy bonds, but there are not enough of them. The ECB hoped that because it's buying more ABS, then the market will create more ABS for the ECB to buy. And in this case, that would, of course, mean that, of course, there's more credit taking in the Eurozone, more action, and of course, that's positive for the ECB, for the economy, for everything. It didn't really happen. It went on buying bonds. What's the limit for bonds? The ECB buys bonds which have yields that the lowest level is the negative deposit rate, minus 0.20. So if they lower the negative deposit rate from minus 0.20 to minus 0.30 or minus 0.50, they open the door to buying more German bonds, for example, and other bonds which are very, very expensive. Means they have very, very low yields. Okay, so it can solve one problem doing that. It can also, yes, buy corporate bonds, but that could be a bit more tricky politically. And regarding stocks, basically, yeah, we had the correlations changing. But what I think that if the ECB announces a big package of lowering the deposit rates and printing more money and extending it until forever and going very, very, very easy, going very bearish, then the euro will fall and the easy money will also go to stocks. So that will be this kind of inverse correlation. Euro down, stocks up, European stocks up. Regarding Norway, the Wealth Fund, yeah, it's a huge actor in markets. They have a lot of influence. They have all this oil money of the country. And they've been offloading European stocks. Maybe they're doing, yeah, maybe they're just taking profits. I don't know. There are other factors. If the ECB buys a lot of bonds, it'll crowd out money from bonds into stocks, as I see it. So, and always with stocks, you have to be selective. We're talking here about Forex, a little bit about commodities, and a little bit about the bigger scheme in stocks. But if you do invest in the stock markets, you have to look at individual stocks, right? So in any case, I think if the ECB goes all in, stocks up, euro down. Of course, some of it is priced in, but I believe that not everything. We'll continue talking about that, of course, next week. Okay, so I hope this answers the question. Let's take, before we head off to the last trading day of the week and into the weekend, another look at euro dollar. It reached a low of 106.63, still holding to that kind of support line, currently 106.72. Draghi continues speaking. Currently, the headline on Bloomberg TV is strength of the underlying recovery is modest. Basically, they're shooting out headlines from what he's saying at the moment, but we know that the speech is already out. Okay, so Draghi is weakening the euro. That's, of course, the headline for today. And that's expecting more reactions today from Draghi and more events that we already talked about. Anyway, enough said. You can see a recording of the full show and the wrap-up, of course, later on. So that's it for today. Wish everybody a successful trading day with Draghi or without him. And we'll be here on Monday. Good luck and have a great weekend. Bye-bye.